Hey everyone, in this video I'm going to answer which stock is the better dividend stock to buy, AT&T or Broadcom. I'm going to compare these two dividend stocks on the dividend yield, on the revenue, on operating profit margin, and on valuation. Let's get started with the dividend yield. AT&T offers passive income investors a dividend yield of 7.43%. while Broadcom offers investors a dividend yield of 1.98%. But remember, when you invest in dividend stocks, your total return is what matters, not just the dividend yield. So you want to know the other important financial metrics because you don't want to fall into a dividend trap. That is a stock with a very high dividend yield, but a stock price that is very likely to fall. So let's continue looking at more important financial metrics, including revenue growth. And in this metric, Broadcom is considerably ahead of AT&T, and most recently Broadcom delivered 7.77% revenue growth while AT&T delivered 1.44% revenue growth. Looking at the next 5 and 10 years, Broadcom is likely to deliver much faster revenue growth compared to AT&T. I would say at roughly at least twice the rate of revenue growth of AT&T. The next metric I wanted to compare these two dividend stocks on is the operating profit margin. And this is interesting. Over the last 10 years, they have fluctuated between being better and worse. Broadcom, of course, being in a cyclical industry, semiconductors and chips and chipsets and all that for wireless sets are a cyclical industry. And so you could see its operating margin rise and then fall and rise and fall. But most recently, it has exploded, not just increased, all the way up to 45.3%. Meanwhile, AT&T has held roughly consistent since 2016, slightly increasing up to 19.29% operating profit margin. So, even though Broadcom makes AT&T's operating profit margin look really bad, that's not the case. It's just that Broadcom's operating profit margin is in the excellent tier while AT&T is in the very good tier. You won't find very many companies with an operating profit margin of 40% or higher, and so that's why Broadcom makes AT&T look like an unprofitable company when in fact AT&T generates strong operating profit margins. Finally, I wanted to compare these two dividend stocks on valuation. I looked at the forward price to earnings ratio, and according to this metric, Broadcom stock is more than 3 times as expensive as AT&T, trading at a forward PE of 19.78 compared to a forward PE of just 6 for AT&T. However, if I was to pick between one of these two dividend stocks to buy today, I would pay the premium price and I would buy Broadcom. Broadcom's profit margins and revenue growth are likely to be much better than AT&T's. And one thing I didn't show in this video is AT&T's very, very high level of debt. Over $140 billion of debt that AT&T has is a meaningful risk to that stock. So for all those reasons, I would pick Broadcom as my dividend stock to buy. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.